Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for April 21st, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.24 fell from 1.52 last week. The total count of securities in bullish or bearish patterns increased fractionally to 3,112. The count of bearish stocks increased 13%, while the count of stocks in bullish patterns decreased 8%. The Pirls PNF market breadth summary chart shows us a market now 15 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data, from which the chart is generated. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 43 points for the fifth decline in 7 weeks. At a positive 424.77 points, it has fallen below the January 2018 top and continues below the June 2018 top, the February 2019 top, and the October 2017 top, as well as continuing above the remaining 3 tops above plus 100 in the last 30 months, and above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on lower average daily volume. Momentum. The CCI 20 daily, in a Woody's uptrend, is now at a positive 75.14, down from a positive 109.35 last week. At Tuesday, 3/26 close, it formed a zero-line reject long entry signal within the plus or minus 50 range, and did not drop below the zero-line reject pivot point for the remainder of that week, then rose substantially. At Monday, 4:15 close, it fell below plus 100, so we exit the trade at Tuesday, 4:16 open. The result of this trade simulation was a gain of 298.52 points on the Nasdaq, or $7.22 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 5 weeks ago, while the daily CCI 20 began a Woody's uptrend 13 weeks ago. The CCI 20 weekly in a Woody's uptrend at a positive 123.60, fell from a positive 134.52 last week. With 11 weeks above zero, it continues in a Woody's uptrend and continues outside the plus or minus 50 range required for a valid zero-line reject long entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Summary: some tech and brokers on the top, REITs and gold and silver on the bottom. Bullish, computer hardware and semis continue in the top 5. Disk drives, networkers, and brokers have entered the top 5. Gold and silver continues in the bottom 5. Bearish, REITs has re-entered the bottom 5. Oil services has left the bottom 5. Focus this week from www.realinvestmentadvice.com. The Fear of Missing Out by Lance Roberts. The following are some key points and charts. We remain long biased equities currently, but are still maintaining some hedges and an overweight position in cash. SPY is extremely overbought, so a test and failure at the highs will not be surprising. Short-term positioning, bullish. Last week, hold full weight position. This week, hold take profits. The extremely extended buy signal lower panel is not sustainable. It will revert, and the likelihood is it will revert sooner rather than later. If you listen to the mainstream media, you are constantly coached that if you, quote, aren't in, you are missing out, end quote. FOMO, or the fear of missing out, is the biggest detractor to long-term portfolio performance over time. It is also one of the biggest emotional inputs into the buy high, sell low problem for most investors. Investors, both institutional and retail, are now greedy, as measured by the CNN Fear and Greed Index. I leave you with final words of wisdom from the legendary Warren Buffett. Quote, "Be fearful when others are greedy." Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, dlpirl at earthlink.net. For Sand to Pearls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant Easter weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.